Okay, so we have treated the fundamental keywords that we actually need in relevant costing. And we've looked at different examples. Well, we call those examples simple examples. So very soon we'll be looking at a complex one, and we'll also be solving past questions, if possible today or later when we meet again from period. So, but on that, I will just try to recap key points that you must be very aware of or take note of. In short-term decision making, the management will consider the relevant costs of the elements and irrelevant costs of the elements. What we are saying is that in any time management wants to make decision, they will consider the relevant cost to particular projects, and they will as well consider the irrelevant cost elements in that particular project. So for decision-making purposes, cost can be classified into two, that is the relevant and the irrelevant cost. So relevant costs that should be used in decision-making is called as relevant costs. Accordingly, relevant costs can be described as a cost suitable to a specific management decision. So when you look at the cost and we look at it as suitable for a management decision, then we can say it is a relevant cost. In short-term decision making, the relevant cost could incur in the following ways. That is, can occur in the following ways, which we have already treated all through. We have incremental costs, or because we can also call it differential cost. Incremental cost, the additional cost that should be incurred due to a management decision. That is, if the management decides to go for a particular project, they are going to have additional costs of so-so amounts and so-so amounts. Then these costs could be incremental variable costs or incremental fixed costs. So it could be incremental fixed. So when we talk about incremental fixed costs, we'll talk about that as a rent. That is, if your rent will expire in December, but this project will elapse to February. So instead of you to pay a whole year additional rent, maybe the owner of the building allows you to pay the extra 2 months if you are going to spend additional 2 months. So additional 2 months you are going to spend during the project, we call it incremental cost, because you will not have incurred that 2 months cost if you are not going for that particular project. And that's why we call it either variable or incremental cost. We also look at opportunity cost. The opportunity cost can be explained as the value of the next best alternative sacrifice when one course of action is choosing in preference of others opportunities in others costs. So which we have also discussed, we have limited resources and we also have alternative use available for that resource. Now, in relevant costs, I'm trying to recap what we have done so that it will definitely sink into where I want you to sink. So irrelevant costs, those costs that will not affect or not be affected by the decision of the management, we call them irrelevant costs. Like what we have said before, anytime you see sunk costs, These are the costs incurred in the past and cannot be affected by nature decision. So some cost is therefore a relevant cost for making such decision. We also have absorption of fixed costs, or we call it general fixed costs. General fixed overheads. So all these costs, anytime you see absorb, we cannot recognize that as relevant cost. So it's irrelevant. By using predetermined overhead rates and irrelevant costs. Then committed costs, which are explained as well, the costs that are agreed to pay, the costs that are agreed to pay as a result of past decision. So committed cost also is the future cash flow that will be incurred anywhere, anyway, whatever decision is taken. We know about the committed cost already, like your renter. Either you accept the project or you don't accept the project, you will still have to pay for that rent. Then we also have notional cost or imputed cost. Now, the cost used in product evaluation, decision making or performance evaluation is represent the cost of using resources which has no actual cost. So notional cost like notional rent and notional interest. So all this one have been explained before. So I just want you to check again all these key words, and as we solve past questions and more complex questions, you will need all those basic understanding or basic knowledge. So variable costs include, we all know the variable costs. We have material, labor, and use of machine. They are all variable costs. Identification of relevant costs in material costs. When you want to identify relevant costs in material costs, like what you have said, material stock in regular use. If you look at this now, they say regular use. The material stock in no other possible use or not replaced. So you also have to take note of this. If you see all this, their word there. Material stock has no other possible use and no resale value. They are also important to take note of that. The application of relevant cost, current replacement, that is, how much am I going to replace it if I want to change it now? Then current reserve value, if I want to sell it now at a scrap value, how much can I get from it? Then we identify other ones that are not relevant in decision making. So identification of relevant costs in labor. We have unused labor. That is, if they are not available, their unused labor is available, then additional labor. If this particular person will do, if it's to work for 20 hours and he will collect 20,000, but this project you want to go for, he cannot finish it for 20 hours. He will need additional 10 hours to complete the job. So the relevant cost is going to be that additional hour is going to use, which is 10 hours, then multiplied by labor rates. That is how much the person collects at the rate of 1 hour. Then we also have the no unused labor is available. That is when the whole labor are occupied and there's no one that can attend to that particular project at the moment. No additional employees to be recruited. That is, you don't have any opportunity or there's no option for you to get new staff. Probably maybe because of learning curve, they will not be able to perform what you expect. Because in learning curve, We know that if you have been producing a particular product, you are used to it. So the time you are going to use in produce that particular product, it will be shorter than someone that is just coming newly to come and produce the same material or the same product. So there's going to be learning curve in that area as well. Then application of not relevant cost. We have no relevant cost, cost of hiring, contribution forgone from not being able to put the labor to its alternative use. Then, before we go to question, identification of relevant costs of using machines. Using machinery will involve some incremental cost as well. So repair of costs arising from the use of that project. Maybe you will need to service your machine if you are going for that project. You will need also to factor in the cost of repair and maintenance if you are to embark on the project. Then if you will need to hire more machine or another tools, you also consider that as relevant cost. Then fall in resale of own asset which result from their use. So another thing is that if you use the asset, for example, if the scrap value of the asset is 20,000, if you did not use the machine for the project, it's 20,000. But they now put it in the statement or in the question that once you accept this project, you will need to set that particular project for 10,000. It means in the course of using that particular project, it means in the course of going for that particular project, the resale value of the machine has dropped. So you have to consider that particular difference as a relevant cost. Monthly hire purchase payments are committed and therefore irrelevant cost. Monthly hire purchase is either you use it for this project or not, as long as you hire that particular machine monthly, you will actually pay for it. So it's not relevant to decision making. So we'll be looking at this question now. Please let me just attend to this. Someone just send the request. So just a minute, and then we continue from question 1. So you can be looking at the question, read the question, and digest it before we start. Read the question and then try to digest it before we start. Okay, so sorry, let's continue now. The following materials are needed for a special order. Material A, we have different material type. Material A, material B, and C, then D. Then total units required for special order. We have, if you want to require for this material, total units you need to produce that particular order is 1,000 for material A. You need 1,000 material A for that particular order. You need 500 material B for that particular project. You need 750 material C for that project. You need 400 material D for that particular project. Now, units already in stock. You don't have any material of material A. So it means you will need to buy the whole 1,000 of that material. Then for material B, you will need to put, you already have 300 in the stock. So what you just need to buy now is 200. Then for material C, please just a minute. I'm sorry, just a minute. Let me try to connect my. Okay, so let's continue, please. So for material C, you need 750, but you have 400 already in your store. For material D, you need 400 material, but you already have 400 material in your store. Okay, so book value of stock per unit. So the book value for for material A is nothing. For B is 2, 4, and 1 and 4. There is realizable value per unit. That is, if you want to sell it at scrap, you cannot sell material A again, but you can sell material B for 3 naira, for 3 RS, that's RAM. Then you can sell C for 4. You can sell D for 6. Then for replacement, if you want to replace, in case there's any further notice or information that you can replace it, then you have to replace it with those figures. We have 5 naira, 4 naira, 3 naira, 8 naira, 8 RS. Okay, additional information. Material B is regularly used by the company. As long as it's regularly used, you must replace. You must buy once you use it. You must restock with that particular material by the company, and if needed, purchased from the market. Then this other one, material C and material D, are in stock. As a result of excess purchases, and they are restricted in use. No other use is available for C. That is, you have to use C now because there's no other use for C. Then for material D, can be used as a substitute for 500 units of material Y. So it means you can make use, this material D as alternative use. And the alternative use is you can use it for material Y, which could be purchased at RS. So it means if you want to cost the alternative use of material D now, you'll be using the price of material Y per unit, as material Y is not available in stock. So computation of that relevant cost of material will now be, let's look at this now. So let's look at the solution together. So material A is regularly used, as we have said. So if it is regularly used, what do we need to do to that particular question? Is to use our replacement cost. So let's look at it. Material A is regularly used and not in stock. So we need to buy. Therefore, it has to be purchased from the market at the rate of 5 hours per unit. The cost of, so we want to buy 1,000 for material A. Don't forget, this is material A. We need 1,000 units of material A. And how much can you replace it at the moment? You can replace it for 5 naira. So 5 RS. So that 5 RS, which is RAM, multiplied by 1,000 units you will need. So either you use it now, you will still need to replace it with that particular figure. So that is for material A. And what we'll be having now, it will be 5 times 1,000 units, and it will be giving us 5,000 naira as a cost. Then for material B is regularly used, and 300 units are already in stock, as you have explained. So we have 300 units already in stock. If 300 units which are already in stock used for this order, it has to be replaced at a cost of 400, at 4 naira. Let me be using naira to flow with you. So what we are saying is that because it is regularly used, so anytime you see regularly used, you must make sure you replace it. Because once you use it now, you are still going to make use of it in another project. So you use the replacement cost of that particular material, which is 4 naira. So what we'll be looking at now is they have 300 already in the stock. So what we just need to do is 500 times 4. Even though they're going to make use of the 300 in the store, but because it is regularly used, they will still need to repurchase the difference so that they will have that particular level of stock. So we'll be having 500 times 4, and that will be giving us what? So 500. So therefore, relevant cost of existing stock is 1,200. I did get that 1,200. Get my calculator. So all we have to do now is the balance of 2 units are not in the stock and therefore have to be purchased at a replacement cost of 4 naira or 4 R. Then additional purchase of 200, which is 800. Then therefore relevant cost of material B is 2,000. How do they get that 2,000? Let's look at, so it will be 4 times the balance of, because they have 300 already in the store. So they will need to buy that 200 for 4 naira. Then the 300, how much are they going to buy the 300? 300 for 4. That will be giving us 1, 2. If I'm not mistaken, that will be 1,002. So 1,002 plus that 800 will be giving us 2,000 for the relevant cost for that material B. So we can as well say the replacement cost, which is 4 naira, multiplied by the total material they will be using, which is this 500. So because they will need to replace that particular one they use. Okay, so we are good with material B and material A. So let's go to material C now. So material C, which is 400 units. They have 400 units in store, but they need 750 units of material. So 400 units are available due to excess buying, and it is not replaced and restricted in use. Material C is not regularly in use. So we don't need to use the replacement cost for that, and could be sold at the rate of 4 naira per unit, thus getting a revenue of 1,600. So let's go back and see. We are going to use the resale value because it is not regularly in use. So the only thing you can do is just to sell it as scrap. So if we are using this particular 400 now for this project, the opportunity cost here is 4 naira times this particular 400. So 4 times 400, it will be 1,600. So that's why we have it here. So the opportunity cost now is this. Because they have two options. The option one is either they use it for the project they want to do, or they can sell it at half value. So because they are using it for the project, they will be missing this particular figure as opportunity cost. And opportunity cost is a relevant cost based on our earlier discussion. Then the balance of 350, which they are going to purchase, which is not in stock, will be bought at 3 naira at replacement value. So that replacement value is like a market price that they can buy that particular stock. So 750 minus 400 will be giving us 350. Then 350 times 3 that they will be purchasing, that balance will give us this particular figure. So total unit they will now be using is 750 units, and our total relevant cost in this question will now be 265 as we've discussed. Okay, so material D now. Material D, 200 units are required for this order, which is already in stock. Let me go back there. So they need material D, 400 units, and they have the whole material D in stock, which is 400. So there's no need for them to buy additional material. But let's look at it. The same material D could be used as a substitute for 500 units of material Y, which could be purchased at 5 naira per unit. So what the question is saying here is that material D, 200 units are required for this order, which is already in stock and will not be replaced due to restricted use. So the alternative opportunity available as below: either to sell the existing stock at the rate of 6 naira, or they can also afford purchasing units with 5 naira. So this one will be for material Y. If they want to use it for material Y, they will sell it for 5 naira. But if they want to sell it at scrap, which is 400 units, they'll be using this particular 6 naira. So let's go back there and see. So if they want to sell it now, they will sell it for 6 naira. That's resellable value, which is 6 naira. But they have another option to sell it as regard to material Y, and that would be 5 naira. So looking at this question, the total opportunity cost here, if material D is substituted for material Y, the opportunity cost for material is 2,500. So therefore, total material cost for this order, for material A, which we have done here, material A is 5,000. Let me use another color for that. Material A for this one is this. Then for material B, we have our alternative our relevant cost as 2,000. Where do we get the 2,000 in material B? We have this particular figure which we have explained earlier. So this will be part of relevant cost. Then for material C, we have 2,650. Someone is asking question. From material C, why do they have to sell 400 units? Why they are in need of 750? Are they not meant to buy extra 30, 350 to add up to it? Okay, I will explain that again then. For material C, okay, I will explain that again now. So for material C, they have 2,650. And from our calculation, this is a relevant cost. Then for material D, we have 2,250, 500, which is also here. Okay, so back to your question. You said material C. So let's analyze material C again. What material C is saying is that they have 750. And then, they need 750 of the units. Then they have 400 units on ground. Since they have 400 units on ground, what they have to do, all they have to do is to look at it if it is regularly used or it's not regularly used. That will always be the determinant of your decision. Are they regularly used or not regularly used? Now, they are giving us the clue here. From here, they said material C and D are in stock as a result of excess purchases, and they are restricted in use. Now, no other use, there's no other use is available for C. So if they fail to use it now, they cannot use it again, except they sell it at scrap. Now let's go back to that analysis of C. So material C 400 units are available due to excess buying and is not replaced at restricted use in use. They cannot replace it because you are not using it. Why do you need to replace it when you are not using the particular material? That's what the question is saying. So they are not replaced because they are not regularly used. Let me mark this as well as red. Now, to be sold at the rate of 4. Why do we need to sell it at the rate of 4? So because we cannot use it again, there's no need of us to go and buy it and replace it. So we cannot use replacement value. The only thing you can use is to use the scrap value of that particular asset. And the scrap value of that particular is 4 naira. So we use scrap value of 4 naira. Then additional analysis now goes on like this. But if used for this order, they could not be sold at 4 naira. So if you are going to use it for this order now, you are going to have opportunity cost. And how do you get opportunity cost? Assuming they can use it again, based on your question, assuming they is in use, is in regularly use, you are going to say 750 times the resale value, the replacement value. So it will be 750 times 3 naira. That will have been the figure. But now we cannot do that. The only thing we can do is to scrap this value, which is 400. 400 times 4, whatever we get, then the balance on this, which we are now going to go to the market to buy. We have to buy the exact unit so that we will not have excess in the store again. So 350 multiplied by amount we are going to buy in the market presently. So that will be giving us this particular figure, 350 times 3 naira, and we'll be having 1,050 naira. So addition of these two will be giving us 2,650. I hope that one is clear now. Let me hear from you before I move on. Yes, it is. Okay, so fine. Okay, so that is all about this material aspect. Let's look at for another one. Another interesting one. These are the questions you should be expecting in your exams. Though the first one we have, the first examples we've done too can also be tested as well. Okay, so question 2. A company has recently received a special order. It's always order. They always want to choose between contract or more contracts for them to make a right decision. So a company has recently received a special order from a client to supply 10 gates within a month for 80,000 each. So they have 10 gates to supply, and one gate is 80,000 per one. So I will mark this one. If the company decides to accept this order, following cost information will have to be considered. What are the following information? They have 10 gates and one is 80,000 per one. That's the selling price. Now, material. 7 meters of iron are required for a gate. If they want to produce that particular gate, they want to make it, they will need 7 meters for that particular gate. While at present, 10 meters of iron are available in the store. They have 10. They needed 7-meter iron, but they have 10 in the store. That's cool. With the total book value of 60,000. So the total 10 is 60,000. The question is, are they going to make use of the whole 60,000? The current market value of iron is 7,000 per meter. So it means if you want to buy that iron now, you will buy it for 7,000 per one. So instead of 60,000. So it means the current market value of that 10 meter of iron will be 10 times 7,000, which will be giving us 70,000 instead of 60,000. I believe we get that. Now, labor requirement. Requirement is 27 hours. So it means labor will use 27 hours in production of that gate. The company expects to use 3 idle workers for the job. We are going to discuss that as well. 3